We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up CAD JPY. We are on the 12-month time frame. Price action last candle to the right-hand side is a bullish green candle. Current price is sitting at 102.210. If price comes down, it can tag that low of that red and green. So price can tag that low at red and green at the areas, and that's coming back down at 71.456. Price action push up, it can head to the highest high structure, which would be at 188.782. Before tagging that area, it can tag the midpoint, which will be price headed will be headed to the midpoint, which would be at 129.897. And we also add second level lows, and that will be placed between the midpoint and the lower lows of structure at 98.905. So let's take a look at what's going on in the market. So the market pushes up. Let's see where it's headed. So we had multiple touches towards that bottom of that support. So altogether we have 1, 2, 3 overall, 4, 3, 4, and overall touch. And the market pushed up. So we have 1, 2, 3, 4, 5. So altogether that's 5 pushes to the bottom. And most of the time that's exhaustion of touches to the bottom, and that market breaks up. If not, the market can come down one time, so that would be considered 6 pushes to the bottom or 5 pushes to the bottom and a retest, and that does happen. Price action, where is it currently at? Let's say if it pushes up further, price action coming out of a pattern. So we can see right below price, the red and green candles wasn't able to touch that low, and that means because it was retesting this area here, is retesting the previous side. So basically it tagged that midpoint. So if we see second level lows and lowest lows of structure, if we think about putting a midpoint in that area, we could see price action didn't be able to touch the bottom of that support. So basically it's consolidated on that midpoint between second level lows and lower lows of structure. So when you read the market backwards, is not what happened here. Is actually what happened here is that started the market to push that market to this area, and that pushed that market up. So when we're looking at it, we'll see the market came down for that first, second, third, fourth. So we have a double bottom. You can read it as an overall retest. Market pushed up with the second last candle, lost momentum, came back for a retest, and price is trying to push and break out. So in that structure is reading as a break and retest. But to see this market push up further, we want to see price action engulf the second last candle wick. So anything within that second last candle is considered consolidation. And we do know we have the break and the retest, so that market could be identified as a first, second, third leg coming down, could drop down with the bearish red candle, creates that double top, unless that market pushes up further, and then we'll see that market identify that break retest and the market pushes up, and it may identify as a double bottom as we walk down that time frame. So if price drops down, let's see where it's headed. So if it drops down, we're paying attention to how many touches that we did receive on that second level lows. So when the market went into that area, we did have 1 touch. So let's go for the count. First, second, third, fourth, retest. And if we get that engulfing pattern, that means the price action will change into a bearish red candle. Also identifying price action is not able to break above the second last candle wick, and the market can drop down. That will be coming from 1, 2, 3, 4, a quadruple top or a triple top and a retest. Walking down to the 6-month time frame, so price action on the 6-month time frame is reading as a bullish green candle. So on the 12-month time frame, we did say within this area that the market did what? Push up, came back to retest, and could be pushing up. And this is what we see. Third to last candle was the break Second last candle is a retest. The market's trying to push up out of that. Now, if price action doesn't push and break out, then that means it's stopping at the what? The midpoint of the second last candle. So that means it's identifying that market could be dropping down for a double top. And if it does, that means it can break a little above, but you see the drop down. That means the price action body will pull back down, which will identify the first, second, third leg is the price action candle. And we receive an engulfing pattern that works market down. So it has to engulf the second and the third last candle bodies. And you'll see that double top formation. Once it closes out or reaches down towards the third last candle of the market, that's a complete formation of an M pattern. And if it breaks this area, this price of 90.478, then we're looking for the break, the retest for that market to drop back down. So at least to the midpoint of that structure. So if it breaks here, it headed to the midpoint. So the midpoint will be between the SR lines, will be sitting at the numbers of 84,788. And if it pushes down further, you'll see that market direction. Walking to the 3-month time frame. So price action 3-month time frame, reading as a bullish green candle, still reading as a break, a retest, and see if that market's going to push, but still is reading as it's having a hard time breaking that third last candle. The third and fourth last candle is major candles in the market that may identify a reversal. Primarily the price second, third. The fourth last candle primarily is reading as a push up to the top that lost momentum. So if it lost momentum, that it may be identifying as an overall retest and drop down if price action doesn't break above the second level highs and work its way up higher. But then sometimes you may see the market breaks up to a follow-on level and drop back down. If that does happen, you'll see that M pattern that can be formed. Walking to the monthly time frame, price action monthly time frame reading as a bullish green candle. So you see that the market came out of a break of that midpoint retest, and the market worked its way up. So market's working its way up, but you can see it's slowing down because it ran into that midpoint. So if you break down the areas, this will be the midpoint. We have highest high of structure, the midpoint, and like price action just tagged that area. So if the market work its way up from this area, is identified as what? First, second, third, market push and breakout, may identify another retest if not pushed up with bullish green candles. But we know we have that formation at double bottom, so we're looking for price to break that midpoint. If it's denied, we'll talk about that in a the weekly time frame. If it's denied, it's going to come from that double top on the previous side. So that means that market did what? Stop at the midpoint that we created near the numbers of 103.328. And if it tagged that area and if it pushed down, so if it drops down, that means price is coming from the previous area at the high. So what did we receive? The pattern of that first, second, third, fourth. So market closed out, double top, retest, one push, retest, second push, retest, third push. Markets work his way down back to previous areas. But before it does, it can tag that midpoint, which would be near the red SR line at 98.905 or near that bottom of that red and green structure of 94.957. So all we're waiting for is the pattern to identify in this area. So it can go as high as 105.00 to where lowest price at. So somewhere in this area, that market can still push up, identify some patterns of consolidation, work its way down unless that market push and breaks out. Walking to the daily time frame. Price action daily time frame reading as a bearish red candle spiked down to the low of the third to last candle, not once but twice with the second last candle as well. So what we're going to do is we're going to take the second to last candle, place a rectangle around it, and we're going to take a look at what's happening in that market as we walk down the time frame. 4-hour time frame price action is reading as a bullish green candle. So it's trying to come out of the second last candle being a spike down. So when you see these long spike down with second last candle, it lost momentum, it tagged the bottom. So that means it's identified as a what? Market broke into the zone, came back for a full retest, and now it's trying to work its way up. So you can probably take it from this area here, or you just wait for the breakout of the zone, the retesting for the market to break up. And if the market works its way up further, it's going to do what? Go through the lowest low of that structure would be second last candle body. Then it'll look for it to go to the midpoint, look for it to go to the top of that high.